Hello, traders. This is Dave at PreciseAlgorithmTrading.com, and I thought I'd put together a quick video demonstration on how our indicators help us trade the regular markets, the stock market, the exchange traded funds, and that's really pretty much it. So um, this is really, and I threw some statistics up here that I've got built into a strategy for Thinkorswim, but don't get too excited at the rate of return because this is based on a certain number of contracts, and it's unrealistic. It could be shares or contracts, and right now I've got it set to 100. So $7.9 million is pretty unrealistic because nobody's going to be trading 100 contracts, or not a lot of people can. But you also, this is based on the time frame here of 10 years. If I switch this, and I'll just show you to 5 years, it changes the statistics there. Actually, not a lot. That's interesting. If I switch it to 1 year, there you go. So, and these other statistics are just, well, that's fine and everything. I've used really total profit and loss. Is this a winning strategy? You can get into it as much as you want, but I just want to show you, for the sake of this video, that there is math behind this. So I'll go back to the 10 years and I will pull up Apple. So I've got this set at 100 shares. So in 10 years, this strategy would bring you $12,000. Now maybe that's not that exciting, but if you do this on 10 positions at a time, then in 10 years maybe that's $120,000. And it's literally like, there's some other nuances to the strategy where you can take profits at if you get extended, and you see that you're extended. And then I also tie this to the bullish percent indexes that we go through daily on our charts. So if you can kind of see that the market's getting ready to shift, then you can maybe get out of a position sooner rather than later. And that you can also avoid, if you get into some wave theory, you can avoid some bad trades. So there can be more nuances to this, but this at its core is really, it is a profitable strategy. And there's other things you can do too. It's like, this is only based on the daily chart, and if you tie it to the weekly chart, your profits should get better. So anyways, and I'll go through a couple other positions over here. So here's like American Express. So that's $702 on in 10 years time. That maybe isn't that appealing, so maybe you wouldn't take a position like this. And there's randomness in these charts. The other thing you can do is you can look at each individual trade. You can evaluate it that way. But so long and short of it, let's go back to, let's look at the IYT. It's the transportation index. So right here, based on the true Momo indicator, which is really the indicator that we use the most along with price, we got a buy signal on 329.23 in this particular instance, and it went up, pulled back, and you could set stops along the way and stop yourself out, or you could just wait till you get a sell signal, and there hasn't been one. So you get this, I mean, it's been back and forth. It hasn't really made a gain as of the moment. But if you look back here, this thing had a nice buy signal back here. It went up, pulled back. This is where you could have set a stop under a pivot, or basically a get out worst case scenario type of a thing. Or if you maybe take 2 bars in a row where you start breaking to the downside. But this thing took off and went up, and we actually ended up with 2 trades, which I think both were profitable by at least a little bit there, but maybe you'd stay in for a piece of it, and there could be some nuance, is really what I'm getting at. You can also use this midline indicator that we've got here, the red trail. I call it a red trail scan because I built it around a scan. And you can tie all that together and say, well, I'm not going to get out until that thing's broken to the downside. You can see when it gets broken to the downside, it all turns, really that's the 2 major lines, turn up or down, and they're still down right now, so maybe you wouldn't want to take this trade until you get a nice buy signal with everything flowing in the right direction. That's not the way I trade, but I like to start trying to get in early when you see a breakout that's starting to happen like that. Or if we go back on this chart a little bit longer, you know, here's some breakouts that were happening along the way, and they happen to go along with the true Momo indicator pretty well. Just in this case, it's such a fresh start after such a sell-off that, you know, this is where I would be careful and cautious with pivots and looking for ways to basically stop myself out if I was wrong in the trade. And you can also see that it works to the downside. I don't have the statistics built or on this chart right now. I do have them built for the downside, but it also works on the downside, which in my opinion is it's proof that if something works to the upside and the downside, that the long-term potential for this strategy is it's proof. It's the proof's in the pudding. The proof's in the statistics. So that's how that works, and I hope that helps. I'm going to leave this video there. Thank you.